NSDL IPO. India's most awaited IPO is here with much more attractive valuation. The issue price itself indicates a significant discount against its competitor, the peer company CDSL. NSDL is India's oldest depository. Its IPO already opened and got fully subscribed within hours. This IPO is a sure shot oversubscription candidate and only very lucky investors are going to get an allotment. The current GMP is hovering between 135 to 155, suggesting a strong potential of listing gains at a range of 17% to 18%. But is this IPO really worth the hype? How does this company positions itself against its only competitor CDSL? How should you approach this IPO? Should you be investing only for listing gain, or should you be thinking about this IPO with a long-term perspective? Here is the complete analysis and let's dive into it. Before we begin, if you are new to this channel, I am Harshith Shetty, AMFI-registered mutual fund distributor, investment mentor, coach and founder of WhatsApp-based investment community which helps investors across India. I personally invite to join my exclusive investor community, link given in the description and the comment. So let's come back to the important topic. Here is the IPO snapshot. There is no fresh issues here. 100% of the issue is offer for sale, which means that some of the investors are offloading their stakes worth 4,011 crores, some of whom are booking 400 times of the return. How did the anchor investors participate in this IPO? Anchor investors invested 1,201 crores in this IPO. Some of the big anchor investors are LIC and Abu Dhabi Investment Authority and many more prominent mutual fund houses as well. So what does NSDL do as a business? Here is the business overview. NSDL is a market infrastructure institution. Its job is to maintain demat accounts, settle trades electronically and facilitate custody of financial securities. NSDL offers some of its services through its two subsidiaries. One of its subsidiaries is NSDL Data Management, which offers KYC, e-governance and repository of insurance services. Second subsidiary of NSDL is NSDL Payments Bank, which offers payment gateway services. This particular business has dragged the profitability of the company. NSDL is more institutional facing business, which is preferred by foreign investors, mutual funds and pension schemes. One of the notable metric to focus here is that NSDL has really struggled attracting retail customers, which CDSL has leveraged in a great way. Here are the key metrics between NSDL and CDSL. CDSL leads on profitability, margin and retail growth, whereas NSDL dominates in custody value, issuer relationship and institutional presence. Very important thing to note here is that both are targeting different audience. So what does the financials say about this IPO? The average ROE was at 17%, average ROCE was at 21.6%, average EBITDA was at 32.3% and PAT, profit after tax, standing at 21%. All these financial metrics are great. In addition to this, current EPS is at 15.13, return on net worth is at 16.75%. The most strongest point of NSDL IPO is its recurring revenue. 42% of its recurring revenue is coming from custody and maintenance charges, which is very low in volatility and gives a very strong stable income. NSDL is a very profitable business. It is debt free and earns a very stable income like a utility business, but its slower growth impacts the operating leverage. But as a business, it is very stable and less volatile. So let's talk about some of the key risks and strength of this business. This IPO is 100% OFS, lower account additions when compared to CDSL. Most of the fintech companies are preferring CDSL over NSDL. Highly regulated business, pricing is highly regulated here. Market dependency is also a factor. Lower volume, lower the fee. So what are the key strengths of this company? Institutional dominance is the key and strongest point of this company. 73% of the shares is coming from the unlisted equities. Recurring revenue is another strongest point. Very low volatile and stable income is flowing from custody and maintenance charges. It has 65,000 service centers, whereas CDSL is having only 18,000 service centers. So what is valuation and GMP saying to us? At the issue price of 800 rupees, the company is valued at a PE ratio of 46.6 times, whereas CDSL is commanding a PE ratio of 65.6 times. This clearly indicates a valuation gap between NSDL and CDSL, which is what shows in GMP. The current GMP is ranging between 135 to 155 as on 30th July 2025. This GMP is suggesting a listing price of anywhere between 935 to 955 rupees per share. So finally, what is my verdict on this IPO? What should you be doing? The valuation is fair. The IPO is fairly valued, not expensive, and also it is not cheap. The clear gap between the CDSL and NSDL valuation gap shows in the current GMP. So here is what I feel about this business. NSDL is profitable business with very solid and stable income streams. It has has shown very high operational efficiency in recent years. This is not going to be a multi-bagger IPO, but this is the business which is showing us a solid fundamentals with a consistent income stream. This will give us a very stable growth in coming years. This business is super solid. There is a clear gap between valuation when compared to its peer and competitor CDSL, which is what showing in GMP level. So listing gain is a very high probability. So should you be investing for listing gain? Of course, yes, you should be investing for listing gains. And if you are thinking whether to invest for a long term, that is probably a yes. We are not expecting this business to be a multi-bagger. They are very stable, profitable and consistent in their performance. So this is all about NSDL IPO. Let me know what are you going to do with this IPO, applying or not applying. Let me know in the comment box. I am Harshith Shetty signing off today from this IPO analysis. Let's meet on next IPO analysis. Till then, take care. Thank you for watching.